Joining me on IPEM's 2017 Web TV is Benoit Grossmann. Welcome. You're the CEO of Idinvest.
Morning.
Idinvest, a leader in the financing of SMEs. You have $7 billion under management, 3 business lines: private debt, private funds group, and growth capital, which is accounts for about a quarter of those assets. And this is the sector that I'd like to talk to you about today. Could you give us an idea, a recap of 2016 in terms of growth capital activity at Idinvest?
Okay, so in terms of investment, in gross capital, we invest approximately 100 to 150 million per year, which was the pace that we had like in 2016. In terms of footprint, geographic footprint, we focus only in Europe, with France representing approximately 40 to 50% of that, which is a weight of France in the private equity in Europe. And in terms of domain of investment, we make some investment like in the fintech sector, in the food tech sector, or a sector related to digital. You know, Europe has a strong position in digital investment, and we are.
And you have strong experience.
Yes, and we strongly believe that we have the right entrepreneur to drive this company. And now in terms of investment and divestment, last year we made quite a lot of divestment. We, for example, one of the companies were listed on the Nasdaq stock market, talent company. We sold WeThings to Nokia. We sold Webedia to Fimalac. So we made some good divestment. And this month we're going to close to the divestment, which is good. You know, in terms of investment pace, we're supposed to divest the same amount of money that we invest, which is the case to Idinvest. So we are very happy to get money back to our shareholder.
Do you see this growth capital activity growing, not only in terms of deals, but in terms of value of the overall pocket that you have available for that?
Yes, definitely. You know, more and more the company are looking to expand like internationally, so they need much more money than what they used to have like a few years ago. And the amount invested per company is higher, which is why we know last year we raised a fund dedicated to growth investment. We made the first closing. We made the first closing to 250 million, and we hope to do a final closing within a few months from now, up to $500 million, which is the right size to do some growth investment.
When you say that investments are higher than they used to be, because the needs of the companies you're investing in are higher?
Yeah, because the competition is higher, because there are most of the companies prefer to get some money from private equity rather than the stock exchange. So
opportunity.
Yes, they're very opportunistic, and there is more and more company. I mean, the pace of developing the company is faster and faster. So this company needs money. So.
And when you say there are more companies, you invest in the growth capital approximately half in Europe and half, well, all of it in Europe, but half of that in France?
Yes, yeah, 100% in Europe. This is our DNA. We invest in Europe because this is our DNA, so we don't invest outside of Europe. Of course, we can invest like in European company, and this company making business, of course, in the US or in Asia, of course. But we invest in, yeah.
But am I right in understanding that if this activity is growing, if the investments you are making are higher because the companies need larger investments, it's because they are on growing markets,
yes,
growing sectors? And are these sectors that are growing within Europe, or are these global sectors?
It's a global sector. It's a global sector. So of course there is some company, for example, a company like Saranza. There is no way for this company to expand in the US. I mean, Europe is a continent which is large enough to have business for this company. But company like Criteo or Thailand, they definitely needed to expand to the US because for this like the retargeting market, it's like it's global market, which is not the case, for example, e-commerce like in the shoes or whatever. Europe is large enough.
Big enough.
Yes.
Right.
So every time it's very specific. Some company needs to expand like in Asia. Some company need to expand in the US. Some company, Europe is a strong market enough. So
it makes a lot of sense in the digital environment. Is
yes.
that true? You mentioned food tech.
Yes.
Is that?
It's more local food tech. You know, for example, we invested in a company called Frischti. So they started in Paris. More than that, they started like in central Paris. You know, it's very local, so they are expanding to deliver food all over Paris. And then they want to expand like in another city in Europe. I don't know if it will be like Berlin or London, but it's for this kind of company, it's very local, so you start from scratch.
What do you foresee for 2017, maybe the years beyond? Do you see major shifts in trends? Do you see new opportunities that are arising?
Yeah, so like there is a sector which has not been disrupted yet, which is like the insurance sector. So all the company involved in all the startup involved in this sector, I'm sure like in 2 to 3 years from now, we'll see like a lot of company in this sector. For example, you get like a group of friends or family, and you try to get like a self-insured. You get self-insured for this kind of around these people. So it's kind of brand new. So no one was successful to enter this market, but I'm sure like in 2 to 3 years from now, like we'll have like a lot of shifts in this industry. Fintech has been disrupted already for a part of it, not yet, but the insurance is like it's a global market. A lot of things need to be done in this market.
And what's interesting is that the change would be driven by really digital transformation, which is at the core of your competency. So perhaps there would be other sectors further than fintech, insurance, but maybe others that could see a disruption thanks to the same core technology know-how.
Exactly. We're
here at the IPEM 2017. What kind of opportunity is the IPEM for you and for a company like Idinvest?
For Idinvest, it's a good place because there is this place where you meet at the same time LPs, JPs like us, and also we have some startup companies. So it's in the same place. You can gather all these people, and also to be like in Cannes, it's a nice place. So you see people like in a more friendly environment. People are here for 1 day, 2 days, or 3 days, which is not the case when you have a meeting in London and Paris. Everybody is in a hurry because they have meetings and so on. So you get to see and to meet people like in a friendly place, which is nice.
And it's a people business.
Exactly, it's a people business. So
Benoit Grossmann, CEO of Idinvest. Thank you very much.
Thank you.